What's up, guys? It's Caleb, the Heikin Ashi investor, and I am back with a quick weekly review of the major stock market index ETFs, looking at it through the lens of the Heikin Ashi candlestick technique. So let's dive right in here. Apologies for the late video. Getting ready for some travel. Time got away from me a little bit over the weekend. Also had some family in town. So as you are looking at this chart today, I will probably repeat it multiple times, but the newest candle that you're seeing is this week, Monday. This is Monday, September 18th, and not the 16th when I would have hoped to have filmed this on Friday. So keep that in mind. Let's dive in real quick here to the QQQs. We are on the weekly chart. Here's kind of a zoomed out look. This big old U-shaped recovery here that has started to stall out. If you've been watching my previous videos, you have a general idea of where the market has been. Let's take a look at this weekly candlestick chart. As we have talked about in the past few weeks, what we have going on here are shrinking bullish candles, and now if we want to go ahead and cheat and look into this week, a little bit of a red bearish candle showing up. But this is Friday right here, and what we are looking at is a lower wick and upper wick with a really small bullish body to the upside. If we draw a couple lines here, you can see that we have a little bit of a tightening range. We have these lower highs being put in on weekly candles, higher lows. This is most likely because we are consolidating and cooling off from this really meteoric rise over the course of the year from March up through July. And we have the interest rate decision coming out this week on Wednesday, and the Chair Speaker Powell is going to get up there and talk about interest rates and what that decision is going to be. And so you're probably going to see a little bit more choppy action before the market picks a direction that it wants to go. On the daily chart with the QQQs, we have the lines here that can show the tightening of the price action. The 50-day, this red line is right here just hovering around the price, and nothing is really happening as far as decisiveness goes. Little bullish kick up, sold off, and then now we have mixed candles, not very attractive action. When you're looking at the Heikin Ashi, what you love to see, if we can go back here, earlier in the year, are no lower wicks on the bullish candles, and then no upper wicks on the bearish candles like you have right here in the middle of the screen. That is nice price action, easier to trade, easier to decipher. Personally, when I'm using a Heikin Ashi technique, I start to see something like this, I just sit out and wait for a direction to get chosen, because obviously we are just in the mix here for the time being. Let's look at the SPY. Go ahead back to the weekly chart, zooming out. Very similar. We're just kind of squishing down into a range, consolidating, if you will, a lot of these gains we've had over the course of the year. Put my lines on this one, a little bit of a triangle forming. Gonna most likely be like that through the week as we wait for the interest rate decision. Very, very, very similar Heikin Ashi bars here with just this gross action on the SPY. IWM, last one we're going to look at, the small cap index ETF here. A little bit different look on this one as we've seen in the past couple weeks. If we look at the weekly chart, we documented pretty well the stoppage right up here around this 200 level. Well, we rolled over again, we moved down, had a little bit of a perk up here with this upper and lower wick doji-like candle on the weekly chart, but then proceeded to continue to move back down. On the daily chart, if we zoom in a little bit more, you can see quite a bit of support down here at this 200-day simple moving average. So really, as we move into the interest rate decision, have formed quite a strong level of support where price doesn't seem to want to really go below $183, $182. It wants to sit right above that. So could be a launching pad to move back up. and it could fall through. We don't know. We're not going to predict. We're just going to watch and see what happens. What the Heikin Ashi technique is telling us, at least on the daily chart right now for the IWM, is that we are looking at a bearish trend that started to flatten out with one bullish day that then turned back into, on Friday the 15th of September, sorry I said the 16th earlier, turned back into another bearish day. And down here at the bottom of the screen, the price action has been under the zero line for a while, dating all the way back to the 6th of September, and didn't quite want to peak above the zero line when we had this day right here last week. So there it is, my friends, the recap. As we can see, the market is waiting for something to happen, for a catalyst to move. Handful of earnings that have been coming out over the last few weeks have not seen very much follow through. If you are a breakout buyer or someone likes to buy these earning breaks, what you have probably noticed is that you are getting a good pop and then it falls flat on its face, or a pop and drop, as some people like to call it. So, my recommendation, what I am doing, I'm not here to recommend actually, what I am doing for myself is mostly sitting on my money right now, sitting in cash, just kind of waiting for the market environment to look a little bit more positive or encouraging, start to see some breakouts stick and not fall flat on their face, and really just see which direction we want to go. Are we going to make an aggressive, clear movement to the downside or the upside, or does this become a range-bound environment for a while? So good luck to you with your training out there, or your trading, and I hope everyone has a wonderful week, and we'll do this again next week.